Hello traders, Gary Wagner here, just before 11 o'clock in Honolulu, 5 o'clock in New York on Wednesday, the 3rd day of September 2014, and this is the daily report for gold and silver. After yesterday's dramatic decline, we do have a small bounce to the upside, and we do have potential support at around 1261.70, the 61% retracement level. We'll talk about that in a second. Currently 1270.10 puts it up roughly 370 on the day. The low 60.50, 1260.50, the high 1272.30. Silver also trading higher this morning, but only up 1 cent on the day, so a very, very nominal change. 1917.5, the low 1901, the high 1934. More on silver in a little bit. You know, traders, yesterday's dramatic decline in the precious metals market, specifically gold, took many traders by surprise, I being one of them. Absolutely took me by surprise for a couple of reasons. The first and primary reason was the citing factor yesterday was the fact that we had tremendous manufacturing upticks. I believe the largest increase in about 3 years in terms of manufacturing. And that's obviously extremely bullish for the economy. There's no doubt about that. We have record car sales right now. Now, we also yesterday saw the equities markets soften a little bit. So they interpreted or took that information in a little bit differently. But what I find most interesting, and you know that I usually talk about my fundamentals in my opening letter, and I keep the video pretty much or predominantly geared towards the technical aspect of the market. But I think that there could truly be some sort of a disconnect that is going on between what gold is supposed to represent in terms of a safe haven and the global anxiety, the hotspots that exist around the world today. And I see a disconnect in the reaction to gold to a geopolitical hotspots or geopolitical climate right now in the market. That being said, the one thing we want to see is there truly a disconnect, or are we seeing a smaller aberration in the market? And that's something that's a complex question that we'll answer only over time. So on a technical basis, we had this dramatic decline. Interestingly enough, it hit a low both yesterday as well as today at around 1261. The reason this number 1261 is a fairly important number, now 60.50 was a low today, but the reason that that is so important is that when we take a look at the major rally we had end of last year, beginning of this year, took us through January, through February, into March, this $200 rally. A 61% retracement of that rally is 1261.70. So it is a number that matches up as a pretty critical number. Now, the reason that we're so aware of this number is during our initial decline or retracement in the market comes down, it finds support at roughly 1275, trades within this range, and when it breaks to this new low, it actually breaks below 61. It doesn't go as far as the 76%, that was 1231, and then we had the second of these two rallies, this $100 rally, 50% of this one. From there, we got a decline back down to our 61% retracement, which is where we are at today. And if we look at it, we are still seeing a series of lows that are higher. At the same time, we are still seeing a series of highs that are lower. So even with this breakout, we did break out of the compression triangle we were looking at, but we haven't broken out of the range in a dramatic sense that what we're looking at is a sheer and utter breakdown in price. So traders, this is the compression triangle that we just spoke about. We're looking at the series of highs, series of lows, the fact that the range is compressing, and we absolutely broke below that. We've also seen instances where we've broken above certain trend lines only to kind of back off. My sense is right now that I'm in a holding pattern to see if we get a continuation of the mayhem that really started yesterday, in which we broke below this particular line. And the reason that I'm in a wait stance rather than initiating immediately a short position or looking for support is this is a very, very critical area right here on a technical basis at around 1260. And until we have a little bit more evidence, meaning market breaking below the 61% level or finding support and moving back into the triangle, we don't really have enough information to give a solid sense of this market is absolutely going to be moving down over the next couple of weeks or moving up. We always look at the fundamentals as a precipitating factor, in other words, the reason that the market will move, and then we look at the technicals to distill that information and, most importantly, to quantify that information so we can act upon it. We are getting a push-pull scenario with the fundamentals out there. We absolutely saw a pretty solid break below this resistance line, but we're still looking at a series of higher lows. So we haven't broken this low right here, which is 1240. That would obviously be the signal that we were headed to major lows and probably going to test the double bottom at 1180 if in fact we broke below 1230. If we find support here and moves up, it tells us one thing. However, if we do get a solid break to below the 1260 level on a closing basis, my sense is the next level that it's going to have to test is this most recent low at 1240. So for that reason, we are simply waiting right now. We are not initiating long or short positions in the market. Now, traders, on a technical basis, as far as silver is concerned, I see absolutely no solid support level in terms of any kind of Fibonacci retracement area like we're getting in gold, because realize within gold, we're taking a look at the most recent rally that we had, then we're taking a look at our decline. And when we do that, we've broken below this 76% retracement level on our short-term study. And traders, if you recall, during the same period of time, this being the beginning of 2014, this is when we saw gold really begin to take off. We had a pretty solid area of a month in which silver traded flat and then down and then traded up. So we never got the same type of dramatic rally in silver that we got in gold in terms of percentages. So even if we take a look at a different fib retracement, which goes from this high rather than this high, our numbers get all clustered up in here. What I mean to say by all of this is that on a technical basis, really any way we look at it, there's really no clear levels of support coming into the market really until these bottoms right in here, which come in right at around 1880 to 19, and of course this low right in here at around 1860. It doesn't really give us a lot of information. So I have nowhere near the potential optimism that we might see a recovery, except to say if we have a thriving economy, the fact that silver is an industrial metal, we should see some sympathy bullish action due to that. However, sidelined in silver also, but I believe that there's more potential downside right now on the charts in silver than there is in gold. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Thursday for another daily update and review. Bye-bye.